Dan Davis, 80K Wealth Advisory Group, President, co-founder, filming today from the St. Louis lobby where we are changing it up for you a little bit. We normally video from the conference room, as you know from watching, so I figured I'd give you a little change of scenery today. From our most recent market updates, you know that we've been talking about how long the economic expansion and the financial markets have been growing. And all good things do come to an end. And I believe that what we're starting to see right now is that the global economy, while it's doing very well, we're starting to see some fissures that are happening. For example, you take a look at Turkey, South Africa, Argentina. Venezuela is a bit of an outlier. But when I start to see those, I interpret that as the beginning of the breakage that's going to be happening that will ultimately lead to the end of the expansionary market cycle. Now, why is it that I think that and others believe that it's not, that it's more just an issue that you have trade war issues, you have the Federal Reserve policy that's creating hedge fund money, leaving those markets, exasperating the Chinese stock market, crushing the Turkish lira. And many believe that that is not the beginning of this end that I'm talking about, but rather that it's just normal part of trade discussions that are happening. When I start to see history and I look at how things run and how they come to an end, you normally start to have on the outer fringe some signs of things slowing down and having weakness, and that's why I interpret it that way. Now, when I take a look at it, you're talking about what and when. So what am I talking about? I'm talking about a global slowdown that I think is on the horizon. But the when part of it is not very soon. It's not like I see it happening in 2019. It's more like I see it happening in an intermediate period of time, not a short term. And so when we start to take a look at what that might look like, it would look like a global slowdown. It would look like a typical recession, and it would look like something that would happen like sometime 2020 and beyond. Now, a lot of this is what I would classify as anticipation, probably, but not a prediction that we're going to have a recession in 2020. Why the probably? If you take a look at some what-if scenarios, if the midterm elections go blue and the infrastructure spending that Trump would like to have happen does not occur, then it probably is sooner in that early 2020 timeframe. If that infrastructure spending happens, and if some of the trade dispute stuff gets tampered down, then it's later and it's more mild when it does occur. So there's still a lot of things that we don't know as to how they're going to play out that we'll know over the coming months and year. So what I want to make sure that I'm clear on is that I am not saying that I believe that we have a near-term recession coming. I'm just saying that we've used this baseball metaphor. I believe that we have finished the seventh inning, that we're either late in the eighth inning or early in the ninth inning. Now, whenever you follow baseball, you know that if you are in the ninth inning, what you don't know is it 3 up, 3 down, so it goes really short, or is it something that extends quite a while and even goes into extra innings? So because we don't know that, we'll be monitoring that closely. But again, it's that we believe that the economy globally and the U.S., mostly in the U.S., is doing very well, and then we start to see some things that cause us to see the end coming in the intermediate term future. And so the major headlines that we see that sort of cause me pause would be around trade wars. And so I don't actually believe that we're in a trade war. I believe that we're in a trade fight. So why is it that I believe that there's a semantical issue that's significant? If you go in and you take a look at, say, for example, Wikipedia. Wikipedia goes in and defines a trade war. They use the word extreme. They use words like tariffs, trade barriers, and then protectionism, leading to countries turning inward selfly, and then being self-sufficient instead of having open trade. Some of that is happening, but not some of the key parts. So, for example, what's happening? We see trade barriers, we see tariffs, we see fighting going on. But what we don't see, in my view, is extreme. And we don't see the U.S., nor do we see China moving away from global trading, but rather trying to redo the negotiations of how that happens. And a little bit of history is helpful. So for example, if you take a look at the 90s when China was allowed into the World Trade Organization, the Western civilization was hoping that by allowing the East in, that they would move more left, liberalizing. But that just has not happened. And so you read all the stuff about Xi consolidating power. He has more dictator type of strength within the communist regime, much like Mao had, but it's my opinion he's doing a significantly better job than Mao. The other thing that's going on is that they have not opened up as much as what the West would have desired. So I believe that what's going on is a renegotiation of the relationship between China and the WTO and how that works with free trade. And personally, I think it's necessary. Now, I'm not a fan of how Trump is handling it from a standpoint of his style, but if you read his book, The Art of the Deal, you realize that Trump's style is to create chaos, have options that he's looking at, and try to negotiate within that chaos to improve his position. He does not start with an end in mind and have a very articulated plan and strategy how that's going to go. So when people say he doesn't really have a plan and he's insane because blah, 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 I think that they're overreacting to it. I think he's operating exactly the way that he always operates. If you take a look at Sun Tzu's The Art of War and you read the book, what you realize historically is the Chinese are very wise at understanding strength, understanding weakness, and when they know that they're in a weak position, they will make compromises. They'll retreat and give up territory in order to play the long game where they can have a better position. But in doing that, when you understand the East culture, they have to be able to do that in a way that saves face. And that's where I have the biggest concern of how this could progress into a trade war, is that if we don't allow them to save face in that compromise and we create too much shame, then that will increase the risk that we could have a trade war. Now, I think the Chinese realize that they are not in a position of strength, that America needs them less than they need us. We could do what's done in China throughout other parts of the world, would create exasperated supply lines and would create a long period for that to occur. But the long and short of it is that China needs us more than we need them. China knows that. I believe that this is not a trade war. It could turn into that, but I believe that this is just a renegotiation of what's going on. So as a result of this, you've heard me talk in the past that we believe that North America, led by United States, and Asia, led by China, that those two areas are the areas that we're most optimistic about for the next decade to 20 years. Obviously, with what's going on, the returns on the Asia side of the balance sheet have been hurt, so our returns have been hurt, both on the stock side as well as the fixed income side. But we don't believe that that's going to be a long-term trend. Our belief is still bullish in those two categories, so we haven't made any kind of changes. You've heard me talk about periods where we're risk on, risk neutral, or risk off. We have continued a risk on position. We believe that the season that we're in, that the returns will benefit from that, not every quarter or even every half a year, but when we look at 1 and 3 year periods of time. So as a result, we're still risk on, but as we move towards believing that we're close to the end of the 9th inning, we will go risk neutral. And if things exasperated where it turned into like a 2000 or a 2008, we would go risk off. Obviously, investing has a lot of risk involved in it, so we'll pay close attention and do our very best for you. So, in conclusion, we believe that the global economy is doing well, especially in the United States economically. We do believe that we're starting to see signs that the end of the expansion will occur. We don't believe that that is in the near term. We believe it's more intermediate term. If it does happen soon, it should be mild. And we're still risk on. And we will get to a period where we'll go risk neutral. So just wanted to say thank you very much for the trust and the business that you've provided us. We'll continue to do the very best we can for you. And when appropriate, we appreciate you sending this link out to others that you think might be potential clients. Referrals are always appreciated. Signing off from St. Louis, farewell.